day. Good day, ladies and gentlemen. So today's session is a structured cycle audit based on on-chain data and macro liquidity data. No narratives, no emotional-based conclusions, only what the key indicators are measuring and what they have historically applied. We're going to go through the charts. We're going to go through the Pi cycle top, the MVRV, the M2 money supply, the Puell multiple, and Bitcoin dominance if we have time. So you can see what the data is actually seeing right now. And we'll also talk a little bit about the ETFs. So when gold got its ETF in 2004, it helped extend and reshape its cycle by opening the door to a new class of buyers. Bitcoin got its ETF in January 2024, and thereafter we saw that there was a lot of change in the Bitcoin cycle. I will give my opinions or what I think is happening later on. Just before we start, let's just quickly have a look at who's in the chat. I think it's quite early today. So we have got John Legend. I hope you're well. We've got Black Hat Team. I hope you're well. We've got myself. There are plenty of other people watching. So if you are watching, do drop a hi in the comments. Okay, so basically what is on-chain data? So on-chain data are indicators that are built from or use directly data from recorded from the Bitcoin blockchain. They measure what the network and the markets are actually doing using numbers that come directly from the blockchain because it's hard data. It's not like headlines, it's not hype, and it cannot be tampered with. On-chain indicators that we're looking at today, like I said, was the Pi cycle top. Now, this is the most accurate cycle top indicator of them all. Then we've also got the MVRV, which is an on-chain indicator that looks at Bitcoin's market value and its realized value. It identifies how in profit holders really are. It is a very powerful indicator. We've got the Puell multiple that we'll be looking at next. This is another on-chain indicator coming directly from the Bitcoin blockchain. It measures whether it measures the miner's revenue. And if the miner's revenue is unusually high or unusually stressed, we can kind of gather where we are in the cycle. We're also going to be looking at a couple of off-chain indicators. And they're not produced by the blockchain themselves. They're external indicators that measure things like liquidity, demand, capital rotation. We will be looking at the M2 money supply, which is an important indicator. It's the macro liquidity indicator. Bitcoin is highly sensitive to liquidity conditions, and when global market money expands, risk on assets like Bitcoin often benefit. We can also have a little look at the Bitcoin dominance. This is a market structural indicator. It tracks Bitcoin's share of the total money cap, the total money or how much it has of the market cap. It's a clean way to monitor capital rotation and whether money is flowing or consolidating into Bitcoin. And then finally, we can address the ETFs. If we run out of time, we'll probably skip Bitcoin dominance because I know there's a lot of information out on there, and that's pretty much that's a very easy indicator to understand. Let's talk about the Pi cycle top. It's my favorite indicator, and it's one that when it signals, I will be exiting the market straight away. The Pi cycle top indicator is an on-chain indicator. It's based upon two moving averages. We're looking at the 111-day SMA. And when that crosses above the much slower 350-day SMA times 2, the pi cycle top signals that Bitcoin may be near or at its peak, i.e. the top of the bull run. It's also very good at calling bottoms. The indicator is unique because it uses not just price data that comes from the blockchain itself, but it has a mathematical relationship specifically tied to the ratio of pi, hence its name. So pi is the number that tells you the circumference of a circle, the 3.14 number. I'm going to share my screen very quickly. Okay, so here, let me make myself smaller. I don't know if I can. There we go. So here what we're looking at right now, because we need to look back at the history. I absolutely love the history. Let's look back at 2013, bearing in mind there was an abdominal year, 2011, which I will go into, but not on this particular live stream. So if we look at 2013, the pi cycle top was hit in two places. Over here in April 2013, and then again in November 2013. Now, in April 2013, we literally started to go up. Now, this was because we had the Cyprus banking crisis. Bitcoin is a safe haven. It's absolutely freezing here over in the UK. It really is. I've just come back from work and I was like so cold in this house. Oh my God. So Bitcoin's a safe haven. There was a lot of media attention that was coming onto Bitcoin. It was growing in adoption. We had Mt. Gox at the time. People were able to buy it. Bearing in mind, we had already just come out of the financial crisis, so of 2008 to 2009, when in Cyprus, they started to say things like, we're going to start to use money or we're going to tax the money in the banks. People naturally got very, very scared. And this is why we see this rise here up to the cycle top. Now, the cycle top, which is really very interesting, it was signaled on the 5th of April 2013. The price was 142 US dollars. Now, Bitcoin actually peaked. Bitcoin 4 days later on the 9th of April 2013. The price difference between the all-time high and when the pi cycle top was hit was only 87 US dollars. Now, why did we go straight down? Just to let you know, we went straight down from here because we had an issue with Mt. Gox. It temporarily suspended trading, and the price of Bitcoin literally fell down to 100 US dollars. Very, very, it was just a technical issue. It only went out for a couple of hours, but back then, Bitcoin, Mt. Gox was Bitcoin. Early on, it was Bitcoin is digital gold. There was a lot of early adoption, excitement, all the rest of it. But then obviously we had the fear and the uncertainty, etc. But this is absolutely amazing that even before all of this happened, we had the pi cycle top hit. Nobody was to know that Mt. Gox will suspend trading and then we will go down. So this is obviously is based off a mathematical equation as well. Okay, so next we have the second part of the bull run. So Bitcoin did recover. Bitcoin Bitcoin did recover quite well, and round about here, October, November time, again it went parabolic. The reason why Bitcoin went parabolic after recovering from the April crash was because of increased media coverage, retail interest, growing adoption, especially from Chinese investors. Now, bearing in mind, Bitcoin had climbed literally from around here. From around here, from around here, it climbed what for around about £200, around about here, £200 here, all the way up to over $1,000 US. A lot of people were in profit. A huge amount of people were in profit. People took profits, especially traders, all the rest of it. There was market FUD from China, but the Pi cycle top wasn't obviously aware of that, and it did signal. If we go back and look at it, the signal for the Pi cycle top actually came on the 1st of December. The price of Bitcoin was 1,150. Bitcoin actually topped the day before on the 30th of November. That was a 1 day difference, and the price difference was literally $15 US. So this is the power of the Pi cycle top. I'm just going to quickly go and show you the rest of the times in history where Bitcoin has topped. When the Pi cycle top has gone off, has signaled. If we look at, this is my favorite bull run. If we look at 2017. Again, we have this amazing bull run where we have this, where we go up, literally we go up. We have a couple of pullbacks, which are absolutely normal. I think we had 6 pullbacks of over 30% in 2017, but the Pi cycle top hit on the 15th of December at 17,900. On the 17th of December, in 2 days, the market actually peaked and the price difference was 1,750. The market peak was, or the all-time high up here was 19,650. If we have a look, now if we go forward, hang on. I should have actually shown you this chart. Because you can actually see the moving averages here. So the blue line, this line here, that's the faster line, the 111-day moving average. Then we've got the red line, the slower 350-day moving average. When the blue line crosses above the red line, and that was happened here, and we had it here. When the blue line crosses above the red line, that's when the Pi cycle top is signaled. Okay, so we covered 2017. Now, 2021 is quite interesting. 2021, it was only signaled once, and it was signaled in April in the first part of 2021. I'm just trying to figure out the prices. Okay. So in April 2021, the Pi cycle top was triggered on the 12th of April. The price was 59,600. 2 days later, the Pi cycle top was off by 2 days, and it actually, on the 14th of April 2021, was the first peak here. The Pi cycle top was hit. However, we had this dip. So if we just remember what was happening over here, we had COVID. We had a lot of money from COVID. We had, no, quickly checking the chat. Oh, hi, Blocky, how are you? I'll call you guys out in a second. So if we have a little look down here, where's my cursor? Here. We had 2020 was a halving year, but also it was a pandemic year. There was a lot of money in the system. and a lot of that money came in to Bitcoin. The money went into the stock market, which then went into other commodities, which then went into Bitcoin and into crypto. So we had all of that money come in, and then around about here, we had a number of things that happened. We had the Tesla FUD, we had the China FUD, all the rest of it. The Pi cycle top was hit. We came back down, we ranged for a while. Bitcoins were taken off the exchanges, and then we actually had the all-time high in November 2021. The difference between the all-time high of April and November was only 4,000 US dollars. So if you had bought or sold in April 2021, I don't think anybody would have cared too much about 4,000 US dollars. Then obviously we went down into a bear market. So the Pi cycle top now for 2025, say 2026, has not been hit. This is why I do think that we have broken the 4-year cycle. Every 4 years, the Pi cycle top is hit. It wasn't hit in 2025. That's not the only reason why, you know, why we've probably broken the 4-year cycle, but it's one of the indicators that we should be and have always been looking at. At this moment in time, it doesn't seem like the two moving averages are anywhere near each other. Let me see if I can get them out again. Can you see the difference between these two moving averages? It's absolutely huge. It's humongous. Look at them. So it doesn't look like the Pi cycle top is going to be hit anytime soon. Bearing in mind the actual all-time high of the last cycle was in November, we do have something called dead cat bounces. So that could have been a dead cat bounce. It could have been the market top. We're only going to know this sort of stuff in hindsight. But at this moment in time, these two moving averages are really, really far away. In fact, I don't think they've ever been further away. Oh my gosh. Just realizing, I don't think they've actually been further away. So yeah. Okay, so that's the Pi cycle top. That's where we are with the Pi cycle top at the moment. It hasn't been hit. It has hit in all the other all the other cycles, but it hasn't hit in this particular cycle. Let me just quickly go to the chat. And I hope you're well, Nathan and Nightbot. Oh, Rustybot. Oh, okay, sorry, 1 second. I'm actually in the wrong part of the chat. I do apologize. K-Dub, I hope you're well. Rob C, I hope you're well. And Happy New Year to everyone. Mr. 60, I hope you're well. Okay. I think a lot of the time, yeah. Blocky, I hope you're well. You don't trust the Pi cycle top. The thing is, with the Pi cycle top, there's two indicators, which I must admit, there's two indicators that we do need to pay attention to. One is Fibonacci, or two tools that I really do think we need to pay attention to. Fibonacci, because all the other indicators, or almost all of them, as far as I know, all the other indicators, they're made by traders, they're made by, AI or however they're made. Fibonacci is actually based in nature. I absolutely love Fibonacci. I'm learning more and more into Fibonacci. Fibonacci, actually, we've actually already hit the golden pocket for this cycle. I do think the 4-year cycle is broken as well. That's just another reason. There's so many things that we can go into. The Pi cycle top was not hit in 2021, in November 2021, when we had the actual all-time high. And this is why when people come back and they say, oh, I was in November 2021 and I thought this time was going to be different. And I thought we were going to go into a super cycle. I'm like, yeah, I can get that, because a lot of the indicators were not hit before the later part of 2021. Oh my God, it's so freezing here. I should have put something on. Oh, Crypto Billy, I hope you're well. Jessie, I hope you're well. Yeah. Oh, Bessie. All right, okay. The next indicator we're going to be looking at is the MVRV. So the MVRV ratio, there's kind of two of them. The MVRV ratio is an on-chain indicator. And this is why I absolutely love on-chain indicators, because they come straight from the blockchain and they're pretty much tamper-proof. It means that it uses real blockchain data, not just price charts or external sources or hype or somebody's opinion. And it's based on actual blockchain activity. The MVRV gives a more accurate picture of the market behavior than traditional indicators that only look at price trends. MVRV is best treated as an early warning risk zone tool, not a clock that will just fire straight away. This is the pi cycle top, and we'll get into that and I'll show you why. So the MVRV, and we have actually done a live stream about this, and we have done a live stream about the pi cycle top. Holders of Bitcoin, holders and traders, they buy Bitcoin at different times. They buy Bitcoin at different prices. Some have been holding their coins for a long time. I know people have been holding their coins from the early days. So some people have been holding their coins for a long time. So when the price is low, some of them have bought it when the price was low. Others have recently bought Bitcoin at a much higher price. Everybody wants to make money in crypto. So depending upon the price that people buy Bitcoin, it might be that they might be in profit, they might be in loss. The MVRV, which is actually the market value to realize value ratio, shows how much profit or loss Bitcoin holders are making. It compares the current price of Bitcoin to the price each coin was last moved. So if the MVRV is high, it means a lot of holders are in profit. And if it's low, many are in loss. And this helps analysts understand market behavior, whether people are more likely to hold or more likely to sell because they're in profit or loss. So the MVRV, the higher the rate of the MVRV score, the more Bitcoin holders are in profits. And the holders can be anyone, individuals, retailers, institutions, countries, banks, all the rest of it. This means that that a larger number of holders that bought Bitcoin at prices much lower than the current market price are in profit. So they're sitting on significant unrealized gains, because not everyone's a holder like me who wants to keep Bitcoin for their great-great-grandchildren. When the MVRV is very high, it can signal that the market is overheated because many people may decide to sell and take profits, and this creates selling pressure, especially from institutions and traders. On the other hand, if the MVRV score indicates that a lot of people bought Bitcoin at a higher rate and they're at loss than the current price. In such cases, people are less likely to sell because they'll be selling for a loss. And some may even buy more, seeing the lower price as an opportunity. Analysts and people use this MVRV gauge to understand market sentiment, potential risk, and identify possible market tops or bottoms. Now, how realized value works. When Bitcoin moves on chain, the network records a transaction. So a realized value is every time a Bitcoin moves from one address to another address. It's considered as if it was reevaluated at that price, regardless of why it moves. So that means if somebody sold their Bitcoin, yes, that movement reflects a true market transaction. But if, for example, somebody just moved their coins between their own wallets, the blockchain can't tell the difference and it still counts it as a new cost. So it's not bulletproof. In other words, the realized value metric doesn't know who owns the wallets and only sees the coins moving. So although it's incredibly powerful on-chain measure of market behavior, it's still an approximate, if that makes sense. Now, the score that the version of the MVRV that we'll be looking at, the one that I like, is actually called the MVRV Z score. The Z score is like the MVRV ratio but supercharged. It's the regular MVRV, which tells you how many people are in profits, how many people are in loss at the current price. The MVRV Z score goes a step further and shows you how extreme those profits and losses are compared to historical levels. So when the MVRV score is really high, it indicates let me just put this on the screen. Okay, I'm gonna have to get this so that I stop getting these pop-ups. So when the MVRV score is high, it indicates that Bitcoin holders are making unusually large profits, and it often signals that the market is overvalued and it could be near its top. Many traders might start to take profits at these times because they're sitting on lots and lots of profits, and we all know that there is a cycle to all financial markets. So, in short, the MVRV gives traders and investors a way to see the extremes in the market sentiment, helping them identify potential market tops and bottoms more precisely than the regular MVRV. So on the MVRV score, you're mainly looking at two extremes. You're looking at below zero, which means that the price is dropped under what investments on average have paid for the coins. Historically, that zone has shown to be up near major bull market bottoms when sellers are capitulating and the market is deeply washed out. On the other end, an MVRV score of 6 and above for this particular metric, um, yeah, for this particular score, it's 6 and above. In other, the way that it's measured differently, because I have seen different ways that this has been measured. It's been measured very much differently, but it kind of shows that there's a lot of people, there's a lot of profits, people are becoming moon boys. There's a lot of you have the euphoria type there, but it also gives you a warning that the market is now getting overheated. So if we go right the way back, so we've got the pi cycle top here as well. Sorry, just from down here. Why isn't it working? Okay, so we need to at one point go through 2011. So here we've got the two peaks in 2013. As we can see, the MVRV score was signaled just before the first peak, just before the pi cycle top. Around this area is actually it's telling us that a lot of people were in profits at this time, and rightly so, because it literally went from almost nothing all the way up to over 200 and something US dollars. And then obviously we see the FUD that's coming from Mount Gox and it goes straight the way down. Then we have the MVRV again is triggered, is above, just waiting for the second pop-up. It's above 6 here. Yeah, so it's above 6. People were in profit for a lot longer before we had all the China FUD, we had the economical FUD, and all the rest of it, and we slid down into a bear market. Right, so this is... So here we've got the MVRV. It's nearly touched it there, but here we go. We're in 2017 now. So in 2017, remember, we had the ICO boom that went absolutely crazy. A huge amount of industrial adoption was taking place. It was the first time that industry was coming into crypto. There was so much social media hype. The Pi cycle top was hit just before the Pi cycle top and after the Pi cycle. It seems like after the Pi cycle top, a lot of people were in profit. A lot of people in profit. So you have the traders taking their profits. Not everyone is an investor in in crypto. So at the time, remember, Bitcoin was this revolutionary currency. It was going to the moon. The institutions were in. People were like, look, if the institutions are in, it's not going anywhere, blah, de, blah, de, blah. Then obviously we had economical concerns. We had the SEC come in, issuing Wells notices to cryptocurrency exchanges, to cryptocurrency projects. We had so much mania in the altcoin market. You could literally pick an altcoin and your altcoin will move. There was anxiety amongst the early buyers because they feared missing the top. People were rushing in, buying as much as they can, and that's why you see that it stayed a lot of, even after the Pi cycle top here, it stayed for a while, and you will see a lot of people will be saying in 2018, beginning of 2018, we were still like, you know what, the bear market's we're still in a bull market. Oh, and then obviously here there was a lot of people. Remember, it shows bottoms as well. So there's a 2018, the bear market, and then all the way through 2019. You know, it was under zero. Another thing to note here is that it was triggered. It was only triggered again. It was only triggered in 2021. Sorry, it was only triggered in what's its name? In the first part of 2021, the around April 2021. Again, it doesn't actually call the top, but it gives you a lot of people are in profits. A lot of people are in profits. People are going to be taking profits because they have lots and lots of profits. Because they have a lot of profit, obviously people are going to be taking money out. This is Bitcoin, by the way. It's not the altcoin market, and it's not everything together. Then obviously we had, we had all the FUD, all the rest of it. Bearing in mind, we're probably not going to get to, it's 33 minutes. We're probably not, I'm probably going to skip Bitcoin dominance because I'm going to be doing a live stream on it. But when you watch the Bitcoin dominance live stream, you will actually learn that the Bitcoin dominance fell off a cliff here. And towards the end of the market, i.e. when we were making the second top as well, dominance didn't really go up, and that was because the end part of 2021 was carried mainly by altcoins, new money coming in, all the rest of it. A lot of people were not in profit. It did not signal the end of 2021. It did not actually signal the actual all-time high in November 2021. So again, this metric did not signal the actual all-time high in 2021. But bearing in mind, there was a lot of manipulation in 2021. There's a lot of manipulation now as well. But the price difference of the all-time high was only $4,000. So a big part of why that wasn't signaled, a big part of why the signal wasn't triggered in 2021 is simple. There was just too much price difference above the peak in April 2021. April 2021, obviously, it topped at 64,000 US dollars. November 2021, it was only it was 69. So actually not 4,000, maybe 5,000, 5,000 US dollars difference. So between April and November, a lot of coins changed hands at higher prices, which pushed up the network average price per coin. So the base cost was already higher. So by November 2021, price didn't actually go too much higher than what people had already paid for it. So yeah, it didn't reach those high levels. Okay, let's just go to Puell Multiple now. Oh, it's Army Piper. Hello, Army Piper. I hope you're well. Thank you for joining. Oh, oh, isn't Crypto Billy so cute? At 2.21. 2:21. I hope you're well. Satoshi's around. I don't know where he is. I've got no idea, but yeah, he's around. For those people who are unaware, Satoshi is actually my Siamese little cat. He's absolutely gorgeous. Okay, the Puell multiple is very important. I only learned how important miners were when I studied the blockchain wars. The block size wars, sorry, the block size wars. The blockchain wars are still continuing. They've been continuing for a long time. So miners operate the backbone of the network. Let me have them up actually. This is the Puell multiple. So this is what we're going to be looking at now. The miners operate the backbone of crypto, of the Bitcoin network. They secure the chain, they produce blocks, and their behavior changes across the bull market and the bear market. Now, the Puell multiple captures this shift by answering one simple question. Are miner revenues today unusually low or high compared to the last 12 months? So we're not just looking at the price action, we're looking at underneath, we're looking at the system that actually powers Bitcoin. Miner economics, extremely important. And they're very, very powerful, very powerful. Miners can be individuals, they can be companies, but they all do the same job. They run machines that secure Bitcoin and produce new blocks. They earn revenue in two ways. They earn revenue through the block reward, that's new Bitcoin created with every block, with each block, and by transaction fees. And these are paid by users to get transactions confirmed. So when you do a transaction and you're using, I don't know, a centralized exchange, the exchange actually gives, or it puts down how much you're going to be paying the miners for that fee. But if you wanted to get your transaction prioritized, you can pay a lot more money and they will prioritize it, and you can get your transaction to go through the network and get settled before anyone else's. They have so many ongoing costs, mainly things like electricity, hardware, cooling, maintenance, personnel. They do need staff, security, facilities, space. So their profits can change dramatically and really, really quickly when Bitcoin's price changes. And actually, they're the first to be hit more than I think anyone else, more than the exchanges, even more than retail, because mining isn't just about plugging in a computer. It's about all the logistics that go with it. And it's a lot of power, a huge amount of power, heat, machines, repairs, space, and the space that you need, the warehouses. I try to set up on mine natively. This is native, okay? I didn't know how it worked. I was looking into it and I decided that I wanted to have my own mining farm. And naively, I thought that I had some space in the house and I could actually have a mining farm there. You cannot. The amount of heat that these miners produce is a lot. Not only the heat, the noise as well. So, if I had to do it, if I wanted to do it, it would have had to be a shed in the garden. I just wasn't going to do it. I wasn't going to do it because the costs are just absolutely ridiculous. So miners are running on physical hardware 24/7. They have real monthly bills. It just doesn't stop because the market is quiet. And that's why sometimes you'll hear, oh, the miners have sold and all the rest of it. They're turning their machines off. They just literally cannot sometimes afford to keep things running. And that's why miners' profitability can change really, really fast. If the price of Bitcoin drops, their revenue drops immediately. They feel it. If the hash rate rises and the difficulty increases, which it does every 2 weeks, they have to work harder and spend more energy to earn the same amount. And if energy prices rise, margins can disappear, even if Bitcoin stays the same. So miners are one of the most real world parts of Bitcoin. They sit on the intersection between the markets and reality. All this electricity, hardware, competition, cash flows, all the rest of it. On top of all of that, you have the halvings, and I don't have it. I don't have it right here, but you have the halvings. Bitcoin's halving schedule cuts the amount of new Bitcoins created per block in half every 4 odd years, thereabouts. So every block is mined every 10 minutes. Every block is mined 10 minutes. But after every 4 years or a certain amount of blocks, the amount of money that people get for mining those blocks, that's cut in half. So it began with 50 Bitcoin per block. That was the block award in the beginning. Then the first halving, which was in 2012, because 2013 we obviously had the bull run. Halvings always come before the bull run. That reduced it to 25. Now the second halving was in 2016, because 2017 was a bull run year. That reduced it to 12.5. Then we had the third halving, which is in 2020. That reduced it to 6.25. And we've just had our fourth halving, which was last year, in April last year, which reduced the reward for every block that people have successfully mine or get as a block reward to just over 3 Bitcoin. And this is built into the way that Bitcoin is. It's built into the way that Bitcoin will slowly release its supply. And every time that there's a halving, it's more scarce and all the rest of it. Now, we're very, very, very early, exceptionally early into crypto and Bitcoin and all the rest of it. The last block will be mined, I think, in 2146 or something similar to that. Don't quote me on that, but like in 100 years, over 100 years. So what the Puell Multiple is doing is simply seeing when the miners are earning a lot of money or not a lot of money, compared to the last year. That compares today's value to all the new Bitcoin that were mined average over the last year. So when the Puell is low, the miner's income is low versus that of the previous year. When it was high, the miner's income is high from that which was the year before. So that's how you can use this to spot tops and bottoms, and I'll show you this as well. So when the Puell drops below a certain level, it means that the miners are under pressure. So here we can see that when it's below this level here, when it's below here, when it's below 1, it's 0.1. Sorry, 0.5. The miners are in trouble, basically. Some miners are struggling to pay their electricity bills. Other operating costs, weaker miners may have to switch off their machines. Some sell Bitcoin to survive. Some literally just shut down because it's not worth it. The miners are under stress, and it tends to happen late in bear markets. As you can see, all of these, most of these were bear markets. 2013, the bull market. This 2000, like I said, 2011, we need to do a live stream on this because we actually had the pi cycle top hit and a bull market bottom as well. So we had 2013, we had the two peaks there, and then obviously we had the bear market here, and then obviously, you know, after the 2017 bull run and all the rest of it. So it shows you the bear markets, but we're looking for the bull market. So where it helps identify tops, sorry, one second. Okay, so where it helps identify tops is when the pull ratio climbs to very high levels. It means that the miners are earning far more than usual. Their profit margins are huge, so they're likely to sell. The miners are not like investors that want to keep for a long time. They might keep some of their Bitcoin for a long time, but they have real life costs that they need to cover. Also, when the price is attractive to them, when they're in profits, it adds to the sell supply. And that often happens when the market's already hot, when it's very hot, and the Puell levels show this at the top of the market. Now, the key is to treat the Puell as a warning zone, not a perfect timing tool. Low Puell, obviously bear market bottoms. High Puell tops, if that makes sense. When Bitcoin is, when we are over 6, so that's 10, it's literally 6. So this should be 6 here. When we're over 6, when we're above 6 on this score, it kind of means that this is when miners will tend to sell. They want to lock in good profits. They have real bills to pay, all the rest of it. So it kind of means sell now. And you can see this as well with the price. This is the price of Bitcoin, and this is how they're selling. They're selling towards or at the tops. It's diminishing returns. There's two things about this that we have to know. It's diminishing returns before, when there was not a lot of miners on the network, all the rest of it, it was hitting a higher rate. Now it was hitting a higher rate. Now in April and November 2021, we'll talk about that. The Puell didn't hit its classic extreme level in April 2021 because it doesn't measure the all-time high price. It measures how unusually high the mining profits are, or the revenues are, compared to the last 1 year, 365 days. By April 2021, and this is really important, mining revenues had already been quite high over the last year, and as a result, the baseline has risen too. This meant, though the price was very high, mining revenue wasn't wildly above its normal range. So the Puell multiple stayed compressed, and it didn't hit its normal red zone. What we have to remember here is that we had all of that COVID stimulus as well. So we had all of that stimulus come in. People were opening up their own mining facilities, all the rest of it. There was a lot more miners out there. And all the rest of it. Now, in November 2021, the 12-month average was still high from earlier in the cycle. So November stood out even less. We are now not in the post-COVID era anymore, where the output of the money is ridiculous. COVID was a once-in-a-generation liquidity surge, and the Puell multiple signal wasn't as clear as it was in the previous bull markets, as we can see. But the Puell wasn't still muted. If conditions keep miner revenues elevated for a long time, the base rate rises, cycle tops can be less blow-off behavior. At the moment, we've seen a lot of sideward action and it's going down. So we've actually got nowhere near the the extremes of how much the miners will be making. Bearing in mind on the mining industry, that actually this kind of shows that a lot more people are taking mining more seriously as well, because it's easier and cheaper to actually buy Bitcoin by mining it now. So a lot of banks, because I know somebody who actually deals with these banks, a lot of banks are looking to open mining facilities because they didn't buy Bitcoin when Bitcoin was very, very cheap. Okay, so it's 50 minutes past. We can go on to the ETFs. Now, I do think that the 4-year cycle is broken. Do we have time? Let me just quickly just check the chat. Hello, K Diggity. I hope you're well. Satoshi's around. He'll come around. I'm actually glad he's not here. He does annoy me a little bit when I'm doing this, because he jumps on the table. Hello, David. I hope you're well. Oh, Mike V, the Mod King. I hope you're well. Good to see you all here. Okay, so today what we have covered, we've covered. One moment. Oh, we haven't even gone to the M2 money supply. We've not even gone to the M2 money supply. Should we quickly check upon gold, or within 10 minutes? Okay, let's talk about gold, because I do think that the 4-year cycle is broken. The reason why I think the 4-year cycle is broken is not based on feelings. In fact, if I was to say how I actually feel, is that it feels like it's not been broken, but I can't deny that it doesn't look like the 4-year cycle has been broken. For the first time ever, we had an all-time high before the halving. We had an all-time high before the halving. We've had 2025. The last time, I think, losing count now. I think it was on the 6th of October that we had the last all-time high. Now, October, we had the last all-time high. That actually could have been it. I do think that could have been it. The money did not rotate as we expected into altcoins, bearing in mind there's millions of altcoins now. If I don't know how many coins that there are. Normally what happens is that we have a blow off top, and we have this phase, this euphoria phase, and all the rest of it. We didn't get that. We have this rotation into altcoins as well. So if you look at it strictly on the part of, we had a halving year, did we make an all-time high? The next year, yes, we did. Why does the halving matter so much? The halving matters so much because of the miners. Basically, because of Bitcoin scarcity, because of the price that it costs to produce a Bitcoin, all the rest of it, everything goes up, everything goes high. I've actually done a short on this, which explains it quite well. If we look at history as well, we've had the ETFs, and now I wasn't quite aware of exactly how much the ETFs changed the gold and silver's cycle. So a Bitcoin ETF was always highly wanted for years. We all know this. We all lived through it, but it didn't come easy. And understanding that story really helps explain why this approval that we had last year was such a big deal. So why did people want an ETF? And I did cover this on the live stream that I did with just ETFs, and we'll probably do another live stream about it as well. But Bitcoin is hard for beginners and institutions. It might not be for me, it might not be for you, but when we were newbies, it was. It definitely was. Not everyone has the time, the energy, the space to actually look into Bitcoin, to look into crypto and all the rest of it. We're very, very fortunate that we've been able to do that and we understand it. People have children, they have jobs, they have care, they have to care for family members. There's so many things that are taking people's time up. I kind of actually feel really sorry for them, and I could really, really understand that people don't have time to understand what Bitcoin is. So it's hard for beginners, and it's really hard for institutions as well to invest in Bitcoin directly. So you'd need things like a crypto wallet, you'd need private keys, you need clarity, all the rest of it. The risks are high for things like hacking, for loss, or you won't be able to access your coins or the rest of it. Regulation was difficult in many countries. It was very tricky for institutions to buy and hold Bitcoin, and it kind of seemed like the regulation was changing, and it was just oscillating between, yeah, it's great to hold Bitcoin and it's not great to hold Bitcoin. So we needed that clarity. A Bitcoin ETF solves all of these problems. So with a Bitcoin ETF, you can invest through a regular brokerage account. NFT companies can hold and store your crypto. There's a lot of security and all the rest of it as well. I've got 4 minutes, so I'm just pretty much going to end it here. But what I did want to say was, when you have a look at the chart, the gold ETF was approved in 2004. In 2004, this chart doesn't show it as well as some other charts, but it was the one that I got, the one that kind of popped up. It doesn't show it as well as the other charts. However, from when the gold ETF was approved, we had this massive, massive, massive run all the way up to here. This is a massive run for gold up to around about 2011. Literally went straight up like that. Silver didn't do as well. Silver did not do as well. So with silver, it was 2006, sorry, 2006, it got its Bitcoin, its ETF, and then you see this rise, and then you see this dump, but then it's risen again, and here you can see that silver has gone absolutely parabolic. Silver has done really, really well. Silver has done really, really well, but because of the ETF, and then obviously more clarity around central banks coming in and all the rest of it, you've got a lot more investors, a lot of more institutions coming in. They're not like retail who come in, who get scared, and then who exit. These are long-term holders. So they're long-term holders, if that makes sense. After the ETF was launched, gold literally went up from around 400 ounces to roughly 800 to 900 ounces in pretty much 4 years. Pretty much 4 years, that's double your money. Something similar happened to silver, but silver's different. It's not just it's not just it doesn't just hold monetary value. It also has industrial uses as well. I think with the ETFs, that's one of the reasons why this cycle may have broken. What I've done, and I'm not saying that this is financial advice for anything, I think from here it literally is 50-50 whether the prices will go up or whether they will go down. What we're seeing now is we're seeing a lot of sideways action. So obviously at the end of the sideways action, it's either going to go up or it's either going to go down. Either way, I was a degen trader, and I was a degen position trader, swing trader, all the rest of it. I've now sold all of my degen coins because I think they're last year's cycle coins. The ones that I was holding, I don't see them going up anymore. I have never sold any of my Bitcoin. I will never sell my Bitcoin. But for me, I have a mindset of decades when it comes to Bitcoin. So Bitcoin will go up even if we go into a bear market. Bearing in mind next year, oh my God, this year we have so much debt, or America has so much debt that it needs to service. It's something like altogether it's something like 11 trillion US dollars that needs to be serviced this year. The banks are in crisis. How do we know that? We know that because the Fed is printing money and they're giving it to the banks. And I think this happened again on the 29th of December when they gave a huge amount, like an absolute huge amount. I can actually get out the chart, but it's just going to take me too long, and it's come to the end of the stream as well. The last bit of the stream was pretty much rushed, but overall, I hope you enjoyed the stream. That was some online data, online market check, and it kind of shows you that 2026 is going to be very, very interesting. I've de-risked. I've de-risked. Nothing I say is ever financial advice at all. Anyway, thank you so much for joining me, and I will see you on Tuesday with Bill.